Bismillahirrahmanirrahim. Assalamualaikum and good afternoon, everyone. First of all, I would like to thank the organizers for inviting me to speak on this important topic. I see some familiar faces amongst the crowd. Some are even my colleagues from Bank Negara. So it's good to be among friends, and maybe some of them can even help me to address questions from the floor later on. Before I move on, very quickly, I am required to actually preface my presentation with an important caveat that my presentation does not constitute legal advice from Bank Negara, and everyone is encouraged to seek your own legal or professional advice on how the laws administered by the bank would apply to you. Before we actually deep dive into the regulatory framework for Fintech, I would like to begin with giving you some context or some perspective on how we actually view Fintech, the strategic importance of Fintech within our overall financial landscape. I'm sure everyone is aware that our functions of central banking at Bank Negara extend beyond conducting monetary policy, managing countries' international reserves, and acting as banker and advisor to government. In fact, another function that we do in order to achieve the aim of sustainable economic growth and prosperity is actually developing a sound, progressive, and inclusive financial system. So with that in mind, we actually consider the growth of Fintech as essential to spur the development of our financial system. We are actually looking at Fintech in terms of its potential to drive improvements to the traditional financial services. And we are talking about not only its potential benefits to financial consumers, but also its benefits in helping our financial institutions become more efficient, help them achieve regulatory compliance and risk management obligations more effectively, and even we regard Fintech as important to help us, the regulators, in overseeing our financial institutions more effectively. Moving on, this is arguably one of the most important slides that I think I have for my presentation. I think we can all agree that financial sector is traditionally a heavily regulated industry, and it is the case for good reasons. Among those are the need to maintain financial stability, maintain the trust of the public, and therefore we make no apologies to the extent of our supervisory and regulatory obligations, and it is for the most part the main reason why our financial institutions are able to withstand global financial crisis. I think what you can draw from this particular slide is how it reflects the existing demarcation of regulatory purview over the financial sector between Bank Negara Malaysia and Securities Commission. BNM actually regulates banking, insurance, payments, and money services, and SC, as everyone is aware, regulates the capital market, which include players like exchanges and clearing houses and asset management. So due to the financial instruments that comes under the purview of SC, which is securities, equities, and debts, which it means that equity crowdfunding and P2P falls under the purview of Securities Commission. So I'm afraid if you have questions on P2P and ECF. I won't be able to address them, and you should redirect that to Securities Commission. But in general, our regulations over the financial sector is regulatory based, which means that what will determine whether a fintech company comes under our regulatory purview is the type of underlying activity that you are conducting. We see that technology as just the enabler, but you have to know, in the earlier panel session, I'm happy to note that the same point was also somewhat addressed, whereby the panel actually made a point that you need to know the turf, which turf of whose turf of, which regulators that you may come under. And this is an important point to note, because there has been studies conducted in Europe and other parts of the world where what they found is that one of the main reasons why fintech has failed is actually because of how they have downplayed that aspect of how they may come into contact with the regulations, the existing regulations. So, for example, in this slide, as you can see, online remittance, conducting remittance online is just sort of a modernization of how remittance business are conducted. So those platforms conducting online remittance will come under the purview of Bank Negara Malaysia. And the same principle applies whether a fintech company actually are doing entire spectrum of the core banking business. As you know, I think, everyone is aware that fintech has the tendency to disintermediate or, unbundle certain functions of banks, of banking. So, but still, you will need to first establish whether what, the underlying business activity that you do may actually come under the purview of Bank Negara or Securities Commission. And this also applies whether you intend to undertake the business on standalone, on your own, or if you are providing the services for the incumbents such as banks and insurance companies. Okay, I would like to now move on to an important piece of regulatory framework for fintech, which was much already talked about earlier, the regulatory sandbox. Sandbox, as the name suggests, means a safe space for fintech startups which are not yet or not licensed by the bank to actually experiment their fintech solutions on activities, as I said earlier, which are regulated activities of Bank Negara Malaysia. And you are planning to experiment this in a live market environment. We actually rolled out this framework sometime in October last year. And since then, we have processed over close to 50 applications and approved 8, 6 of which have actually rolled out their sort of testing in the market. So when we agree to put you into Sandbox, usually it's because of 2 things. First, we think that your fintech solutions actually possess strong value propositions, and whether, in terms of how your fintech solutions can address the certain gaps in the market, or in terms of how genuinely innovative your solutions are. And so hence, we are willing to let you sort of roll it out in the market for testing without actually meeting the full regulatory requirements. And the second thing, that I have sort of alluded to very briefly is when we allow you to conduct, to participate in the sandbox, it means that we will grant some kind of regulatory forbearance, or we will flex some rules for you, and so that the regulations will be proportionate to the scale of experimentation that you would like to do. So why we say that it is a safe space is because when you experiment this, we will impose some kind of parameters and also safeguards in order to contain the risk of the risk of failure or the consequences of it. I think for Bank Negara, I must say that this is one of the most progressive regulatory approach that we have adopted. At our end, it's also quite resource intensive, I must say, due to the fact that fintech solutions usually may span across various functions within the bank. So there are multiple policy departments are usually involved in processing a certain application. It may or it may not be the case. And I think that you probably also know that Malaysia is one of the earliest country in the region which implemented the Sandbox approach, and that is driven by the fact that how much we actually want to spur innovation in the financial sector. So I think another point that I would like to highlight here is that Sandbox, to us, we take it and we value this approach because we see how it will benefit us in terms of how it will keep our regulations current. And in the sense that we want to keep our regulations to keep up with the developments that are happening out there. And in a lot of our experiences and engagement with fintech companies in processing the Sandbox application, I can say that they are also appreciative of the Sandbox approach because it actually helped them to understand the regulatory framework better and appreciate it more. And those who have passed the approval stage get to actually roll out their business model or solutions, which in the first place may not even be allowed to operate in the market. So I would say that Sandbox really is a win-win approach for both the regulators and also fintech companies. All right. I'm actually going to delve a bit more into the operational details of the Sandbox. An important thing to note is that our Sandbox, Bank Negara Malaysia Sandbox, is open to both financial institutions and fintech startups, which means that fintech startups can apply independently or work collaboratively with the bank. Although from experience, I can share that some fintech companies find that the support given by the banks who are more familiar with our regulatory regime actually help them a lot in navigating the regulatory parameters. And also, unlike the UK approach, where the Sandbox is open only for a specific duration, and also for a specific theme, such as robo-advisor, but for Bank Negara, we actually open the application all year round, and we welcome all types of innovation to be submitted. And all solutions are actually to be tested for a maximum period of 12 months, 1 year, although we do not rule out the possibility of extending the testing if there is a strong case for it. As you can see, the Sandbox actually contain 4 core components: the eligibility criteria, the safeguards that we expect that we would impose, the reporting requirements during the course of the Sandbox, and the grounds for which we will, upon which we will revoke the approval. All these you can also regard it as the rules of play for the Sandbox. And I will just briefly run through each component very quickly. Well, there's no link button, I see. Okay, in terms of the eligibility criteria, I think I mentioned previously somewhat that the first thing that we look at is how the value proposition that your solutions actually presents, in terms of how the solutions can potentially improve access to financial services, improve the security of and also quality of financial services, how it addresses certain gaps in, for example, in reaching out to the underserved segment of the financial consumers. And like I said earlier, also the fact that usually what will happen during Sandbox is that we will flex some rules for you, and that is because you have established early on that for you to actually roll out the market, you will be hindered by a certain regulatory requirements that we have in place existingly. So with that, when you come in to apply for a Sandbox, we do expect you to identify what those potential regulatory impediments, those rules that you won't be able to comply with. And we will look into how strong we think the value proposition of your solutions are in order for us to grant you some flexibilities to the rules over the course of the experiment. And I think closely linked to that point of how you are supposed to know which aspect of the rules that you won't be able to comply with is that we also have the expectation for you to know what are the potential risks that may arise from your offerings, and what are your safeguards or control measures that you want to put in place. And on the next point, it's important also to note that we, for the most part, only allow or only admit those fintech solutions that have gone past the proof of concept stage. Meaning, when you apply, we expect you to have conducted the due diligence that verify the usefulness and functionality of the solution. So some lab testing, and all that is sort of expected. So when you come to us, it's actually ready for rollout in the market. And of course, I can say that we actually open our Sandbox to all fintech companies, whether they are based in Malaysia or otherwise, although we actually will view favorably to those that has planned to establish a significant local presence or have planned to contribute to the job creation in Malaysia. So those factors are actually looked into and will help support your fintech application, your Sandbox application. and other requirements such as that the persons must be managing the fintech company must be of persons with credibility and integrity. Sorry. Maybe I will just move on to some of the examples of the safeguards. In order for us to contain the possible, the existing regulatory regimes are there for good reasons of, it is usually a tried and tested framework that we have developed over the course of, consultation with the market participants, and also from our experience in regulating a certain regulated activity. So for us to actually flex some rules or relax some of the rules for you out of this sandbox, we will usually impose or some new safeguards or controls that we think will be proportionate to the testing, to the scale of the testing, and that could be, from taking the approach of caveat emptor. Consumer needs to be aware of the risk associated with with your products and services, and we would expect you to disclose to the consumers and be transparent about the nature of your offerings. And we would also limit the size or frequency of the transactions, or we may limit the kind of target consumers that you are going after and that you're going for, and we could also impose some expectation for you to have in place the redress mechanisms for consumers in the event of some unfavorable circumstances during the consumption, their cost of consuming your financial products and services.